It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal dives into the explosive future of crypto, boldly predicting we are going to $100 billion. Let's catch him now and uncover the insights driving this forecast.
It's like everybody's hopes and dreams are in that banana. If everyone's latched onto this is, okay, this is the time to make all the money. And then, so the hopes and dreams are in it, when the reverse happens, you've shattered their illusions. It's scary. You have to take it really, really seriously.
Doesn't the same apply to when Solana goes down in price? Obviously not the same as a meme coin, but then again, some meme coins have outperformed Solana.
Because the meme coin is all about attention. Solana's got utility. You're building stuff on top of it.
Yeah.
A meme coin is attention. And we saw this with NFT communities. When people walk away, the attention disappears. Everyone's like, well, what happened to my utility? I was supposed to be doing this, and you were going to be building clubhouses. And then they found out it was not. This is a technology that is the new layer to the internet. It's not just about tokens. What's unique about this technology is there's token incentivization built in, which is why these networks bootstrap so fast. It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there. So this is the largest, fastest accumulation of wealth in all human history that lies ahead of us. It's the big rebalance, how everybody can get involved, whichever country you're in, however much you are, right? So it's the big one, the biggest macro trade of all time. That's primarily my interest in the trade. The whole space is driven by network adoption. More people join the network, the more applications that get built, the more valuable these networks become. Beyond that, it's then broken down to different companies or projects selling block space. That's all they do, which is a data storage and essentially that block or distributed ledger. And they've all got a different sales approach. Bitcoin has, we're the most trusted, we're secure. Ethereum is like, we're the broad big one. Solana's like, we're the fast retail. So everyone is selling block space. But again, we're all incentivized to get passionate behind these things because of the tokens. This whole thing is being driven by a big macro trend. The big macro trend is the debasement of currency. So as liquidity gets pushed into the markets every 4 years when the governments go and roll their debts, this is driven by everything I call the everything code, some work that I did showing that every 4 years governments need to refinance their debts. And what they do is inject massive liquidity to be able to do it and try and get interest rates lower.
Frank Richard Algren, a Bitcoin millionaire from Austin, Texas, has been sentenced to 2 years in prison for tax evasion, marking a pivotal moment as the first cryptocurrency-related tax evasion case in the United States. The Department of Justice revealed that Algren failed to report $4 million in gains accrued from his Bitcoin trades between 2017 and 2019, resulting in over $1 million in unpaid taxes. Algren's crypto journey began in 2011, but it was in 2015 when he acquired 1,366 Bitcoins for $495.56 each. By 2017, Bitcoin's price had skyrocketed, and he sold 640 Bitcoins at $5,807.53 per coin, amassing $3.07 million from that single trade. However, instead of accurately reporting these profits, he filed fraudulent tax returns, concealing his capital gains. The funds from his Bitcoin trades were reportedly used to purchase real estate in Utah. Federal prosecutors highlighted that much of Algren's initial capital was secured in 2015. Yet, he submitted falsified summaries of his gains and losses on his 2017 tax filings. This case underscores the growing scrutiny of cryptocurrency transactions as Bitcoin, buoyed by institutional interest and significant milestones, like surpassing 6 figures, becomes a cornerstone of modern finance. Algren's conviction sends a clear message about the importance of regulatory compliance in the crypto space.
So as we do that, it creates a perfect 4-year cycle. And it's not going to go away until we get rid of the debt equations and everything else. So where are we in the 4-year cycle? I break them down by seasons, each year being a different season. Okay, winter being when liquidity is being taken away, 2022. 2023, spring. Okay, markets stop going down. People don't quite believe it yet, but you see green shoots coming, but it still feels a bit wintry and cold and miserable. Then summer, which is what we're finishing now. Macro summer is the year 3, same year as the election cycles. And then we go into macro fall or autumn, crypto.
Yeah. When if we were trying to time
Beginning
it,
of the year. So it's just an annual cycle.
when you say
It's the beginning of the year. We go into the next, the fall or the autumn cycle. That's usually the most
the
explosive.
beginning of next year.
And that's usually the most explosive. So summer starts to rip, and then we hit what I've called the banana zone, which is when everything goes
And
banana.
how long will the banana zone last for?
That depends on global liquidity. Normally, it lasts until about November because of this cycle. It lasts until November, and we have different structures of these cycles. We had the last one, which it usually has a peak around tax season. So March, people have to sell some tokens to pay taxes. It falls for a bit, and then it rips at the end of the year. Last time it fell 50% over that period in 2021, and then it ripped, but it didn't really extend, and everyone kind of got caught out by it was double top. 2017 and 13, well, they were different. They had the same cycle structure. It went to the summer, 2017, Bitcoin 10x'd from there in 4 months.
It's the same.
And that's the blow-off cycle. So we don't know what we're going to get, a stunted cycle or a blow-off cycle. But thinking about the political change and what's been going on, the probability has to be towards a blowout cycle. So that will be much higher price than everyone expects. Most people have PTSD from the last cycle. And they don't want to overextend themselves, and they're worried that they're going to be caught holding the bag, which usually means they'll sell early because the markets give as much pain to the most number of people as possible. Why, in 2021, everyone's expecting 2017 to happen.
Yeah.
It doesn't. Maximum pain.
Spot Bitcoin ETF have reached a remarkable $100 billion in assets under management (AUM) within a single year, a milestone that has ignited discussions about their potential to surpass gold ETF by the year's end. While gold ETF maintained a robust $271 billion in AUM as of Q3 2024, data from the World Gold Council shows significant outflows in November and December, narrowing the gap. In contrast, Bitcoin ETF continued to experience strong inflows, driven by rising Bitcoin prices and heightened institutional interest. BlackRock's iShares Bitcoin Trust, IBIT, has been a standout player, accumulating over $36 billion in AUM by mid-December. With $4 billion in inflows since Thanksgiving alone, IBIT has become the second most successful ETF launch of 2024. Crypto analyst Nate Jiroshi highlighted Bitcoin ETF's meteoric rise, achieving in 1 year what gold ETF took 2 decades to accomplish, signaling a profound shift in investor behavior. The momentum behind Bitcoin ETF is further amplified by a supply squeeze. Over 124,000 Bitcoins have left major exchanges like Binance and Coinbase in the past month, reducing liquidity as institutional demand surges. With institutions such as MicroStrategy increasing their holdings, analysts suggest a potential gamma squeeze could elevate prices even further. BlackRock's leadership in legitimizing Bitcoin ETF, coupled with Bitcoin's recent 2% climb to $101,953, suggests a transformative shift in the financial landscape, with Bitcoin emerging as a dominant investment alternative. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, Happy investing?